Hello, everyone. Good evening. You guys can hear me. Can you guys hear me? Good evening. You guys are welcome to tonight's call. All right, it's nice to actually be here with you guys once again. I'm here to discuss.
All right. So before I actually go on just trying to discuss and analyze gold, what I would like to do first is I'd like to just give us a rundown on the ideas that I'll be using to analyze gold for buys and sells. I'm just going to reiterate on the idea that I'm going to use so that when I'm trying to analyze it, we can flow and just kind of like get the idea, even though we don't understand, but we'll get the idea. And then maybe with whatever system you already use, maybe there's going to be a confluence or something, or maybe you could use that to maybe as a backup for whatever analysis you may have, basically. So moving forward, I'm just going to do everything that I need to do on the daily time frame. I'm not really going to go into lower time frames to check anything. That's first. I like to use one time frame, and the reason why, and the time frame I'm using is the higher time frame in this case, which is the daily. And the reason why is just because I believe higher time frame have more power and control over lower time frames. So when I'm able to spot true supply or demand zones on the higher time frame, then I'm able to understand that the move I'm getting into would go for a long term. So when I'm holding my trades, I know why I'm holding my trades for days or weeks, because I understand that wherever I must have picked my zone from, whether it's a supply zone or a demand zone, it's definitely from the higher time frame zones, and they have a potential of moving long term, basically. So to start off the idea of how I'm going to analyze this with the daily, I want us to actually, if you don't see it that way before, just see it that way right now. So the way I read price action and the way I read market analysis, or how I come to my understanding of what's going to happen next or what's likely to happen next, what kind of trade am I going to take next, it comes from looking at the candlesticks that we have on our charts. And at the same time, it also comes from paying attention to the detail and the information that the candlesticks have presented to me. So it's left for me as the trader to read the information from the charts, basically. Now, before I go into any charts thing, one thing I always understand at the back of my head is that in the market, we have structure, and that's like the only thing I can count on. So from structure, then I can be able to understand which supply zones are valid, which demand zones are valid. So for me to be able to understand, okay, this is where the supply is going to be, or this is where the demand is going to be, it has to come from me understanding structure first. It has to come from me putting structure into perspective. And it's your structure of understanding where did the buys. So when I say structure, I'm not saying high, low, because I believe that's what we're used to. So when I say structure, I just mean where did a long-term buy start from and where did a long-term sell start from? So where did long-term buy start from an end, or where did the long-term sell start from an end? So it's like if there's a buy, if there's a bullish run, where did the bullish run start from and end? So that makes me, that's how structure is being created for me. Basically, that's how I see structure, is what starts off the move and what ends the move. So when I see 2 points that begin and end the move, for me, that's structure. So that's how simple it is for me. So when I find structure, basically, yeah. So moving on to that. So I use structure as like my backbone for everything. So from structure, it all depends on if I have a bearish perspective or a bullish perspective, for example. All right, so this is a bullish perspective when it comes to structure, and this is a bearish perspective when it comes to structure. Okay, so for me to understand the workings of structure, it all depends. For me, it's, and this is it. So I like to trade the edges. I don't like to trade within structure. So the place where you're going to have high probability trades is around the edge of structure, not within structure. By that I mean, if it's buys, this would be the best place for buys. And if it sells, this would be the best place for sales at the edge of the structure. So anything within, it's like, that's the money you're actually supposed to make. If you want to make money, it's what happens within, that's the money move, basically. So it means that you have no reason to be in here. You should already be early to catch the move here, so the price goes down and make your money, or you should already be here to catch the move up, so the price goes up and you make your money. So for me, it's that way as well. So when I look at structure, I'm also looking at the edges of structure, and I like to put myself at the edges of structure because potentially that's where you're going to have like high probability zones where price can go long term. But when you find your demand zones or supply zones in the middle, you would have only short moves. It might give you 10 pips, 20 pips, 30 pips, and just continue in the opposite direction. That's what I mean. But when you find them at the edges, you have a high chance of having long-term moves that will be worth your reward and patience, that will be worth your risk and patience. So that's like the idea as well. Now, the thing is, I'm also very flexible with the idea as well, in the sense that I don't have to always only be in sales, or I don't have to only be in buys. I can be in sales and buys at the same time, and it all depends on where the market is. That's really it for me, where the market or where price is as regards structure. So for me, if even though this is a bullish move, for example, let's say this is a low and a higher high, and then price is meant to create a higher low to continue bullish, right? Let's look at that perspective. Like I said, this is a bullish perspective. So even though this is a high and a higher high, and then we need a higher low to go bullish, of course, I wouldn't be buying high. So if I check, I'm sure that this has ended the move, then I take a hedge sell. And when I take a hedge sell, I'm taking my hedge sell to somewhere. So I'm not selling without knowing where I'm exiting my sales, or without knowing where I would potentially take the counter or the main, the higher low, basically. So for me, that's how flexible I am with the idea of structure. But this is like the background of everything. Of course, I can't go too deep into it because I'm trying to just spend 45 minutes doing this, and I'm just trying to minimize and save time as well. So yeah, same thing I do with the bearish perspective as well. Let's say, for example, this is a high and a lower low, and price potentially needs to create a lower high. Then obviously, if I'm sure that this is the end of the move, then I can hedge a buy up. And like I said, there's a place that price returns to. So when retracements happen, right? Let's get this. This is another thing I've also noticed in structure, is that when retracements happen, now the sole purpose of retracement is to sweep liquidity and connect order flow. Those are the two things. Price sole purpose for retracement are these two things: sweep liquidity and connect order flow of supply or demand. So basically, it would be in such a place whereby, let's say, so within every bullish move and every bearish move is a range and an impulse. Every candlestick is either a range or an impulse. All candlesticks are either a range or an impulse. That's the only two things that you have in the market. So when price goes up, it creates ranges and it creates impulses to continue pushing up. It creates ranges, it pushes it up, creates ranges, pushes it up. So you have accumulations and accumulations and reaccumulations and reaccumulations for price to create a bullish perspective of structure between 2 points. And the same thing happens to a bearish perspective as well of structure between 2 points. Price creates ranges to push price down, ranges to push price down, and so on. It keeps happening until it ends. And when it ends, a new range is created to push price up. And that's how retracements happen. So the idea behind these retracements is that price is going to take out liquidity. Now, for me, I see liquidity as this. I look out for all the ranges and impulses between two structure points, and then I say, okay, which one did price not mitigate, or which one did order flow? Which one can I see that something is wrong? Which range has a void? Basically, I just need to see something wrong. I just need to see a disconnect. The moment I find a disconnect in the moment of order flow, then I know that that's where liquidity is, because the nature of price action is that price will go back to connect wherever is disconnected, sweep the liquidity, and then continue that direction. And that's how structure is created continuously in the market, basically. So this is the idea. All right. I just wanted to give us that idea of what I do. Of course, I didn't go too deep, but I hope that, you know, you kind of like got the idea. So yeah, I would use it on the charts right now, and that's how I'm going to be able to use and understand what's going to happen or what's likely to happen next when it comes to trading gold, basically. So like I said, I'm just going to use the daily time frame to do all my analysis. So starting from right here, I'm just going to look at structure. You have a high and a low, and as you guys can see, it's ranges and impulses, ranges and impulses. That's what you have in the markets. Ranges and impulses, ranges and impulses. And obviously you guys can see that there's no continuation with these ranges, there's a disconnect. So because of the fact that there's a disconnect, this is liquidity. So when the retracement happens, it happens to sweep liquidity. This is exactly what I'm trying to say, okay? So that's how I read price action, and that's how I read my structure, basically. Now, since I understand that structure, I can now say that, okay, everything else has happened within structure, within these 2 points. And at the end of the day, this is where we have our break of structure. This is where price is no longer moving in a bearish perspective, where it's connecting ranges. As you guys can see, this range created an impulse. It's a disconnect. So that's liquidity. The retracement goes for that liquidity, connects and continues in that same direction. Exactly the same thing I just said. That's how price creates structure, basically, in the markets. And that's how I read it. So if I read it that way, then that means that this is a change of structure. Now, if this is a change of structure, this is a low, and then this is a higher high. That's what it is, basically. Now, remember what I said, that if I can say that this is a higher high, then it means that this move has ended. And then if this move has ended, then the retracement is due to sweep liquidity, find a disconnect from the order flow. And then that's why I know that that's what price needs to go to. And that's why I know that, okay, that's the future of gold. Are you guys following? Is it making sense? Is it making sense? Okay. All right. Someone said come again, please. Okay. So I'll just repeat it again. Just the structural part. All right. So to reiterate, I'm trying to say that understanding the idea of structure is understanding that, okay, this is what started off the move, this is what created, this is what ended the move. So this move started off and ended here, and now that's been broken, right? So if that's been broken, then this is what started off a bullish move. And then to me, this is what's ended the move. And I'll explain why that's ended as well. There's a reason why I say that move has ended. There's a reason why I'm saying that demand, that bullish move has ended. Of course, there's something that price saw here within lower time frames that caused the push to the downside. And the reason why I'm saying this is because everything that happens for price to go up is a range and an impulse. A range and an impulse. A range and an impulse. Range, impulse. Range, impulse. Everything that happens in price is ranges and impulse. So you have here again, you have range, impulse. You have range, impulse. You have range, impulse. So the ranges and impulses are broken right there. This is the last range that created a bullish impulse to the upside. And because that range has been broken, that's a change of structure. That is price telling you that it wants to change direction. So because of that fact, that's why I'm able to catch a sell from here, because this is the next range, an impulse to the downside. That's broken structure. So obviously, I was able to find a way to get sell within the lower time frame. And that's why price is not creating a retracement to the downside. So by understanding this fact, I now know that a retracement is due, and I have some facts. So fact one, on the higher time frame on the daily, we are bullish. Price is in a higher high and higher low perspective. That's the first fact that we've gotten from the analysis so far. This is a higher low, this is a higher, let's just call it a high, and then this is a higher high. So if this is a higher high and a higher low, then this is a retracement, which means a higher low can still be created for a continuation to the upside, which means gold can still go bullish in the future. It's just a matter of time, and it's a matter of how will it do it? How would price do that? You know, and it's just time and price action. So for me, I already understand some things. Since I'm in retracement, I'm in the sell retracement to the downside, I know that my target point is liquidity and the disconnected range. So looking at it, I can follow order flow literally by saying, okay, I know that within the smaller time frame, everything here has been tested, and this is intact bullish order flow. So I don't see anything below this. Now we go over to the next range, and as you guys can see, this range created an impulse and it was unmitigated. So even when this was a structural point, that was a disconnected range that price had to go back to connect and continue that direction. Same thing I've been saying it all the time. Same thing. It happens all the time. That's how I read price action. Ranges, impulses, ranges, impulses, ranges, impulses. The ranges and impulses break. The new range starts to push price down. And that's how you know the price is going to where the liquidity is and connect the disconnecting range to continue that direction. So therefore, I can follow order flow by doing so, which means starting from this range that created an impulse, I actually do not see any mitigation. So for me, I'm seeing that as an unmitigated zone. And that's why, as you guys saw me say, my final target, my preferred final target is 1745 for my retracement. So I don't know how price is going to do it. Price has been doing it anyway so far. Price can do anyhow it wants, but the final target is to get to this point, you know. So since I understand that fact, then it's a matter of, okay, let's now look at the retracement. Knowing when to buy is far, far away. Knowing when we are in high potential zones for buy is far, far away. Like I said, when I'm trading structure, I trade the edges. I have nothing to do in the middle, right? So use that idea and understand that price will still go long term. Just be open-minded and understand that. So now, since I understand that, of course, I'm not just going to wait for price to get here before I pick up my profit. So I'm just trying to, you know, flow with the market based on my understanding of reading price action, even within the lower time frames, even within all of these ranges and impulses, because that's all we have, ranges and impulses. I lose some, I win some, and I enjoy myself doing it as well. So looking at this, I can see that this range has created a push down. So for me, that is price creating structure, which means a structure was created at this high. And if a structure was created at this high, then this was a previous structure. So if this was a previous structure that was created to this high, then it means that this is a breaking structure. So that for me is putting things into perspective and saying that, okay, this is now a lower high and this is a lower low. So if price is in the lower high and a lower low, this is price now in a lower low area. The tendencies for lower lows is that they buy. That's like the characters of lower lows. What they do is they buy. That's the psychology of lower lows. Lower lows don't really sell. You know, I'm already in sales anyway. I've got about four sales. So I'm not really bothered about sales. Although I understand where sales should continue. That's another thing as well. So that's why I'm looking at buys, and I'm just trying to hedge my perspective just in case price creates a full bullish retracement, because I can see that there's a disconnected range, there's liquidity. And that's why I said, yeah, this is my target profit is around 1900, I think. Yeah, I think is it here? Oh yeah, sorry, it's here. So I'm looking at the zones as my 1900. So I'm looking at the fact that there could be, you know, that sort of thing. Anything can happen. So I'm very open-minded to the possibilities of understanding that anything can happen. Now, the buys are counter trend. And the way to deal with counter trend trades is to understand that when you get into buys and they give you like 200 pips or 300 pips, you cash out on those because they could easily fail. Putting that at the back of your mind. And at the same time, understanding that if higher time frame ranges are breaking, you know, the opposite ranges. What I mean by that is, let's say for example, okay, so let's say for example, the only reason why price will not continue bullish all the way up here is because it's going to react to supply and continue bearish. Now, if a range breaks this zone, then I can take more buys all the way up here. That's what I mean by that. So I don't have that yet because I like to deal with the higher time frames because they have more power to control prices. So let's go over that now. Now we understand our perspective that this is the lower high. And I don't know for sure if this is a lower low yet. I can't really say because I'm looking at this on the daily. So what I can see on the daily right now is that liquidity was swept, price created a range. So this range that swept liquidity is a very factual area of order. Price can come back here and still continue selling. Okay, that's actually why I'm looking for a hedge of my buys. That's what I'm looking for. I've got this area as a potential for sales as well moving forward. Now, at the same time, I'm in buys here because I can see within the lower time frame that there's a sweep of liquidity and there's a range creating an impulse. It's that simple. So that's why I'm able to find strength in demand and take a buy and get like a sort of intraday, because it's a counter trend. I know that we're still bearish and I know long term is all the way down here. But at the same time, I'm open-minded to the possibilities of price changing its mind because anything can happen. So yeah, that's like the perspective I'm working with right now. As regards buys, I'm already in buys. I've not really looked at taking more buys yet until London opens. Tomorrow, I don't think I'll be trading London as well. I'm not sure, but I can't really say what the future is going to be like. So I can't really say. It all depends on what I wake up to tomorrow, because that's what it depends on. So when I wake up tomorrow, I'm going to look at charts and then I'll understand if there's a way to buy again, or if I'll just wait for interest rates to drop, because that's where my focus is on. I understand that interest rates have the tendency to change price direction. So I'm being open-minded to the fact that the possibility that tomorrow could create a bullish impulse that will change everything and take price all the way up to, connect disconnecting ranges. It doesn't mean that price can continue bearish. It doesn't mean that price can start creating a trend to sort of, flag kind of thing, and continue its way down. So I'm just trying to be open-minded in this case, but I know that what I've got my eyes right now is I'm gonna be looking forward to taking more buys than sells. Just to put that out there, I'm now taking more buys. I'm interested in buys for now. I'm not interested in sells yet, until we get to 1893. So until we get into this area that's straight liquidity, then that's when I'm thinking of sells. But until then, I'm not thinking of sells for now because I'm in sells anyway. So I'm just looking at possibilities of buying, just kind of like counter trend, not thinking it's going to bring too much, but understanding what's likely to do and still being in the game and still being active in the game, that sort of thing. So that's like anything can happen. So it might not be a diagonal range. Anything can happen, literally. I don't know, but I'm just open to understand that, yeah, I'm looking forward to buys at this point. I'm in buys anyway. So if I'm going to pick any buys again, it will just be like a stack for my current buys. And then only time I'm going to take a sell is when price gets to 1893. So until then, buy-minded now more than I am for sells. Until interest rates changes anything, it all depends on that. So for now, I just need price action. I need to see what price would do from now to the interest rates drop. Then I can understand, okay, this is what I'm going to do next, where I can, maximize my profits based on my patience. So yeah, that's like what I wanted to share with you guys. I hope it was informative. I hope you learned something as well. And yeah, I think I was also going to give like some sort of announcements at the same time with the call. So the announcement is I'm actually saying this as this is the last time I'm going to have any public mentorship or all these kind of things. I'm moving into other things right now, and I don't think I'm going to be, in the future, I don't see myself teaching for more because I just want to chill and enjoy myself, basically, and learn my shit and become a master of my shit as well. So what I'm actually going to do, because of course I didn't give you guys heads up, I'm going to open final room for mentorship and all that, but this is like the last time. What I'm actually going into next is private mentorship. So I'll just be doing private sessions, strictly you and I'm not doing the group stuff or you being within a group of people, that sort of stuff. Yeah, that's like what I'm moving into next. I just want to become a master of my shit and do private sessions more, especially with people who, need private sessions. I feel like people would connect and understand this shit more on a one-to-one level than it will with a crowd of people. So yeah, that's like the announcement. Aside that, that's all I wanted to share with you guys. Yeah, that's it. Do you guys have any questions for me? or anything. There's a statement here, price reacting all that extreme supply from that all-time high really got me. Would have been so much cleared if we took that time high. Yeah, there's a reason why everything happens. There's a reason why this sell happens. So the reason is all in the lower time frame. There's just a disconnected range in the lower time frame here. The price came back for and tapped into. Crazy stuff so far. Yeah, so I guess that's it. No more questions. I guess you guys don't have any questions for me or anything. So I guess that's it. Until next time, I'll talk to you guys later on. Take care, enjoy your night. Have a great month as well. Good night, everybody.